Welcome back. This is the precious metals section, so we're finally down to the meat of this thing. Like I said earlier, I see cryptos as more of the speculative investment. So that's your gambling money. That's something where you can have big winnings, but there's also the potential. I mean, you're going to see a big shakeout. There are thousands of cryptos that exist now. And just like the tech of the 90s, most of them are not going to exist 20 years from now. There will be a big shakeout. So we'll get into the gold, which I see as a sure thing because it's just history repeating. It's 5,000 years of history. There's some differences between the 70s bull market and today. In the 70s, where gold went from $35 to $850 and silver went from 60-something cents all the way up to $50, the populations on the planet that drove the price of gold up was just Western Europe and North America. There was an exchange in London, there was an exchange in the United States, and the populations of the USSR, China, these were centrally planned societies where in China it was illegal to own gold, and there were no markets. There was no place to buy gold. Even if you could buy a piece of gold jewelry or something from somebody, it didn't affect the international price. It was only these populations in the green countries here. India was, I remember back in the 70s, you would see these newspaper or Life magazine articles with a famine that was happening in India or Bangladesh or a country in Africa. And year after year, there was a famine somewhere. South America was extremely poor. So these people, it was just 10% of the populations that exist today that can buy gold and silver. Just 10% drove that price. So today, everybody can buy everywhere on the planet. So there's 10 times the people. And in each population, they all have about 10 times the amount of currency. It doesn't matter what country you live in. There's about 10 times the amount of currency that each person has than what they had back in the 70s. Within each population, within each country, we've had something called the development of the investor mindset. You used to be able to save and you could retire off it. That's gone. Everybody has to be able to retire. They have to find investments and speculations and hope that they win. And so within each population, there's about 10 times to 100 times the people that have an investor mindset. Remember, there wasn't a single investor in all of the USSR or China, so you're talking a third of the world's population. Today, investing is a sport in China. So it's 10 times the people with 10 times the currency, and within each population, somewhere between 10 and 100 times more people that are searching for the latest investment that's going to make them rich. That's the quantity of currency that could come chasing a pile of gold that's just a little bit larger than it was in 1980, and a pile of silver that is actually much smaller. The silver on the exchanges is far less than there was back in 1980. So to see some of that, you could go to the top 10 reasons I buy gold and silver. It explains it in much more detail. But this is the value of all of the currency, the base currency that the Federal Reserve creates. So it's basically the paper dollars or the deposits that the commercial banks have at the Federal Reserve banks. And this is the value of the gold held at the Treasury. So it's the number of ounces of gold that the Treasury has times the price. It was $20 an ounce back here, and the ounces were fluctuating. They changed the price to $35 an ounce, and then in '71, the number of ounces became frozen, and this is the price changing. And what you see here is that twice in the last century, gold rose. They expanded the currency supply. Before World War I, before the Federal Reserve, all of the currency, the Treasury notes in circulation were 100% gold backed. There was gold in the Treasury to match the amount of currency they printed. When they established the Federal Reserve, they made fraud and theft legal, basically, and they were able to print claim checks on gold for gold that didn't exist. They expanded the currency supply, and then gold rose to cover the expansion. They expanded the currency supply for World War II, for Korea, Vietnam, Johnson's Great Society. Gold became free trading after Nixon took us off of it. The will of the public and the free market drove the price of gold up to where it more than covered the value of the gold at the Treasury exceeded all the dollars that they had printed all the way from the Great Depression to 1980. And then gold went into this bear market. The same thing started to happen in the year 2000. It's not done yet. I believe this is the same process. If gold does this right now, there's these rare opportunities that you get, these chances, where gold is starting an accounting of the currency supply. And one of these opportunities is right now. And when you look at the spread between these lines, the greatest opportunity is the one that exists today, the amount of gains that you could make in purchasing power. And so if gold were to rise to meet the currency supply here, if the currency supply doesn't shrink, that means gold would have to go to $14,000 per ounce. Is it going there? I'm not saying that gold is going to $14,000 per ounce. What I'm saying is that $1,300 gold is just stupid, cheap, ridiculous. It can't stay down here when you keep on expanding the currency supply. The currency that it's measured with can't continue to expand without real things eventually rising to account for that expansion. And then one other thing I want to show is that since the late 50s, early 60s, credit cards are replacing cash in circulation. Now, if you're going to use the circulating cash as because that's what covered gold the last two times, back in the 30s, back in the 80s. But gold also covered all outstanding revolving credit. If it did what it did in 1980 again, then you're talking about $18,000 gold, and there was an overshoot there. So $18,000 is just covering it. So, like I said, it may not go to 14 or 18,000, but saying that it's over with at $1,300 is just absolutely ridiculous. This is a stupid, ridiculous, low, cheap price for gold. It's basically on sale right now. This is another way of measuring the same information. It's just how much gold do we have to back each dollar? How much gold covers the currency supply? If we had an equal amount, it would be right at this 100% line. And there's the information going all the way back to 1918. And you can see that in the years leading up to World War II, there was more gold in the Treasury than there was currency. So gold is it's expensive when it's here, and it's cheap here, and it's just super cheap on sale here. And I mean, you look at this graph, gold has never been cheaper than it is right now. And if you add outstanding revolving credit to this, the amount of gold that we've got to cover the currency is almost nothing. You're talking about somewhere between like 5 and 8%. So watch episode 3 of Hidden Secrets of Money if you want more information on that. Gold is my second largest investment. My largest investment is silver. But gold, like I said, this reminder that it's been the predominant currency and it's real money for 5,000 years. It's also the predominant central bank reserve for more than 300 years. And this is, again, what's in central banks, and there's still gold there. And they're accumulating ever since the crisis of '08. Central banks all know that there's something up, and they're buying gold because these people know that there have been other monetary systems. The average person doesn't know this, that we've had all these different monetary systems. And when a shift comes, the people with the gold are the rich countries, and the people without it are the poor countries. Another thing I want to talk about is overnight revaluation. This is gold measured in Russian rubles from the Russian Revolution and the overnight revaluations. You wake up one morning and the opportunity is gone. And in a crisis, that is the way it will play out. If we do have that bond crisis, you're going to wake up, and the way they solved the crisis was to make gold $10,000 an ounce or $20,000 an ounce. And they can do that. You go back onto a gold standard. You make it $20,000 an ounce, and you'll print the currency to buy it at $20,000. So you don't have to have the currency. You print it and you buy it. And the gold that you buy backs the currency that you just printed. So It's sort of a scam, but it's better than the current system that we've got. So this is the performance of the S&P 500 in this century. This is the performance of gold over the same time span. Gold and silver have been the best performing assets other than cryptocurrencies for this entire century. And yet, people still consider them sort of an oddball investment, something that you don't want to put too much of your portfolio in. Well, I've been pretty much all gold and silver until I started getting into cryptocurrencies. And for more information on why it's money and stuff, watch episode 1 of Hidden Secrets of Money. Silver is gold on steroids. If you want leverage to whatever gold is going to do, that's silver. Silver is, right now it's very undervalued compared to gold. I'll show you that in a moment. But silver is the indispensable metal. It's not just an investment. Yeah, some of the silver goes toward investment, but a lot used to go to photography. It's less every year. Right now, all X-rays that are done on film, but anything that's done on film, there's silver in photography. There's silverware, there's jewelry, all computers. This computer won't run with it. Every time I touch this, I'm touching a silver contact. There's silver in the light sockets. The switch, the wall switch has silver contacts. Electronics, this is a decorative item if you remove the silver from it. This computer will not function. For those of you that are into cryptocurrencies, all of the mining rigs require silver. Cryptocurrencies could not exist without silver. It's in batteries. It's an antibiotic, so it's used in medicines. It's used in industry. It makes bearings last a lot longer. When you look in a mirror, you're looking at silver. When you look at a DVD or a CD, you're looking at silver. It's the most electrically conductive, thermally conductive, and reflective metal that there is. And because it's an element and not a compound, it's not a molecule, it's a single atom. It can't be replaced. We can't, people will say, well, can't we just create some alternative? Can't we just manufacture something? No, we can't invent a replacement for silver. And in electronics, yeah, you can replace it with gold or platinum, two metals that are a whole lot more expensive. It's in all electronics, and we use up all of these things, and we use up the silver in tiny quantities, and we throw it away. So most of the silver that has been mined throughout humanity is in landfills, and what is left is investment, silverware, and jewelry, and some art items. With gold, only about 5% of annual production gets used up in industry, and 95% just stays above ground in either jewelry, investment, or art. And with silver, it's almost the exact opposite. We use it all up and we throw it away. And there's very little silver above ground. And what that means is that right now, silver is a byproduct. And as long as we're mining a whole lot of copper, tin, lead, zinc, and gold, these industrial metals, silver comes to market as a byproduct. But the actual cost of silver mining, silver producers that are primary silver producers are few and far between, and the cost of the mining is currently higher than the silver price on the average. And as soon as we go into an economic slowdown globally, that means that we won't be mining as much copper for plumbing and wiring for the real estate boom in China. We won't be mining as much lead for car batteries. We won't be mining as much zinc for castings. And so the supply of silver shrinks just as people want it for monetary demand. Now, the gold-silver ratio is the value right now. The silver's value is about 1/80th of gold's value. When it's going down, silver is outperforming gold. When it's going up, gold is outperforming silver. There are these rare moments, there's been 3 of them in this century, where you were able to buy silver at such a cheap price compared to gold, when it's so undervalued. Back here in 1980, it was 1/16th of gold's price. Today it's 1/80th. It was 1/30th in 2011. And it's going to be going back down to these levels. So it's at 1/80th now. If it goes to 1/20th, that means you got 4 times, it's whatever gold did times 4. That's what silver does for you. So my largest, it's more than half of my portfolio is silver when you're measuring the dollar value. And then probably 30 to 40%, 30 to 35% is gold, and 15 to 20% is cryptocurrencies. And that is my portfolio. That's what I'm invested in. Silver is also in this consolidation pattern, it's called. This is called a wedge, a triangle, a pennant, or a coil pattern. This is like a spring being coiled up tighter and tighter and tighter. And this goes back 2.5 years. And so the energy that is released, silver has been in this trading range of 1550 to 1850 for 1.5 years now. And people are bored with it. It's excruciating to go through this. You have to have patience and fortitude. I feel like I have those things because I've stuck with it, and I'm using this opportunity to buy more. I know that there's something coming. I know that we've had an economic stimulus package in the form of a tax cut at the very end of what should have been the second longest economic expansion in history. It's going to become the longest. And that gives us the opportunity to accumulate before a crisis. And this crisis, I don't know if it's 6 months down the road, if it's a 1.5 years, if it's 3 years from now, but it's coming. Ben Bernanke himself said there's going to be that moment in 2020 when we go off the cliff like Wile E. Coyote. So what we've learned in this whole video here is the difference between price versus value, what a wealth cycle is that reveals price versus value, the immense power of a wealth cycle, whether it comes to accumulating real estate, stocks, or gold, that we've learned that the stock market is in a bubble, that bonds are at the end stages of one of the longest bull markets in history, that the stock market is fragile and top-heavy. We've learned with an 89% probability that if you're in stocks, you're going to have a negative return over the next 12 years. We've learned that the health of the companies in the United States is very poor right now, that in the S&P 1500, 15% of them can't make the interest payments on their debt out of current cash flow. We've learned that the baby boom generation is that demographic wave, that we're at the end of this boost of economic energy coming into the economy every year, and now we're going into a period where the retirees are going to be a big stress on the smaller working percentage of the population, and that the baby boomers are out of time. We've learned about the financialization of government, and that the government is completely reliant now on the stock market doing well, and that it will print any quantity of currency required to get the stock market to go up after this next crash. We've learned that we are addicted to debt, that we've got these debt levels that are a stress on society that are unsustainable. We've learned that every 30 to 40 years there's been a new world monetary system, and the current one, the global dollar standard, is one of the most poorly designed out of all of them, and it is 47 years old, and the nails in the coffin are coming more quickly every week now. We've learned that the number of countries that are turning their back on the US dollar is increasing at a very rapid rate. We've learned that the petrodollar is coming to an end, that oil producers can now sell their oil denominated in yuan or convertible instantly into gold. We've learned that the days of the global dollar standard are numbered. We've learned about cryptocurrencies, that they're here to stay, that they're going to affect the lives of everyone on this planet. We've learned that today, everybody on the planet, anybody that has a cell phone can buy cryptocurrencies. Anybody that has a cell phone can check the price of gold, and if they've and they can go to some place like my website and they can buy gold. So the population, it's 10 times the people, each with 10 times the cash, and there's 10 times the people within each population, possibly 100 times, with an investment mindset. We've learned that gold is way undervalued compared to the size of the currency supply, and that it has a history of closing that gap and doing an accounting of the expansion of the currency supply. We've learned that gold has been money and the predominant currency for 5,000 years, and it's been the predominant central bank reserve for almost 300 years. We've learned that central banks are once again accumulating gold, knowing that something is coming. We've learned that there is such a thing as overnight revaluations, and that there could be a day that you wake up and the opportunity is gone. We've learned that silver is the second most useful commodity known to man. Oil is the most useful with about 30,000 uses. Silver is the second most useful with about 10,000 uses. We use it all up and we throw it away. Most of the silver that's been mined is in landfills. Most of the gold that's been mined is still above ground. And we've learned that silver is incredibly undervalued to gold, and that silver has been in a consolidation pattern for between 1.5 years and 2.5 years, depending on how you look at this, and that at the end of this type of consolidation pattern, there's usually an enormous move. And so that could be coming soon. But we've also learned that we're at the end of this, the second longest expansion in history. We just got a reprieve because there's a stimulus package in the form of a tax cut, but that just means that the cliff that we're going off of is that much higher. So there's time to accumulate, but the crash is probably going to be worse. So the devastation to the economy is something that you have to be prepared for. But this, I've been saying, it's in my book, I've been saying this for years, it's the greatest opportunity in the history of mankind when it comes to being able to increase your personal prosperity, your lifestyle, being able to take care of the ones you love. Like I said, I made the most in the shortest period of time during the crash of '08. And so this presentation, we put together this intense presentation because I feel like this is the second time during my career in this where I feel like I know that there's something out there that is absolutely going to happen. I don't know exactly how long it's going to take, but I get the opportunity to get a whole bunch of other people prepared and to help people. And so if you visit our website, goldsilver.com, there's a whole bunch more information on that. One of the benefits that we have, goldsilver.com sells gold and silver at the same price that everybody else sells it. We're very competitive. It's a tough industry that's a very competitive industry. And when you're a customer, you actually help us produce more of these, and you help us save more people, you help us spread information that I feel is truth that people need to know. And so thank you very much for listening. Consider becoming an insider. Get yourself prepared, and if you can, if you got something from this presentation, please tell other people about it. Point other people in this direction, because I really think that there's a lot of information in here that everybody needs to see. Thank you so much for joining us, and thank you guys for joining me with this presentation. I hope you all got something from it, and I hope that this brings you great prosperity and that you do well in the potentially dangerous times ahead. Thank you.